We were talking, I don't know if you heard, we were trying to make up some reasons for why the market looks to be going higher this morning. We use the phrase risk on. It seems like that's all anybody wants to do right now. Would you be risk on, as they say?
Yes, we continue to be risk on. We believe that the markets are going to go higher because you have so much fiscal stimulus coming, as well as, the Fed has been supportive for over the last year or so now.
So in terms of how you're thinking about that, we were also talking about the question of whether you should, buy the rumor, sell the news, if you will, which is to say, isn't it already built into the market?
Yes, there is a lot that's built into the market. I think that you have to be nimble here. When you look at the S&P 500, you would think that it would be, when you look at it on a fundamental basis, it looks pretty expensive. But when you look at it on a relative basis, relative to fixed income, it actually looks attractive. And so what you're seeing is that the market is really running or rising because of the relative attractiveness of stocks versus bonds right now, and the fact that you're going to have all of that support. And I think that the new Treasury Secretary, Janet Yellen, has come out and said that that we need to make a huge splash here and be supportive of the economy. So I think that is the backdrop for the rally that you're seeing right now.
When you talk about not the fundamentals, but the relative nature of this, what would be too high for you? At what point would you say, you know what, yeah, it's too much?
Well, I think that if we saw the market, if you see the S&P get to around 3,900, and you really haven't seen a significant move in yields on the fixed income side, especially with the 10-year, I think that's when I'll start to worry.
In terms of the other big idea right now is everybody's talking about the great rotation. Hopefully, obviously, we get to maybe this summer. I don't know, hopefully at least by the fall, where the world looks a lot better. Do you think the great rotation has already started? Do you think it's going to happen? And if so, how and when do you do it?
Well, yeah, you're starting to see some of that rotation happen just because with the new administration, they've really been focused on infrastructure. That's what everyone's heard. And so you've started to see industrials and materials start to do better. You've started to see energy stocks start to do better as the anticipation of the reopening of the economy, which would obviously increase driver demand. So I think that some of that rotation has already started to occur, and we will probably continue to see it occur even more as the economy reopens and you stop seeing these selective lockdowns.
We're going to get a lot of earnings reports this week. Would you want to be, we're going to hear from Bank of America shortly, would you want to be in the big banks right now, or do you still want to be in the big tech companies?
I think that you have to be in both, actually. I think that there is definitely a rotation with interest rates rising. That is attractive for a lot of financials because, they have been under pressure for so long, and now they're actually going to have the possibility of seeing their net interest margins actually rise. And that's a big positive for the banks.
Shepard Smith here. Thanks for watching CNBC on YouTube.